I shall share my screen. And so today we shall be talking about risk management and position sizing. Okay, so we're just going to wait for other people to join us, really, before we get started. So that's what we're waiting for. We've got that. Give it a second. Right, so I'm waiting for other people to join us, and then we'll get started. Okay, but other than that, so it's a kind of risk management, and then we're going to be looking at position sizing specifically, to be honest. Excuse me. So where is everyone? Where is everyone? Is everyone settled? So if I'm really going to speak to 3 people, I'll speak to 3 people. God have mercy. So we're just going to wait for people because I'd like a few people to contribute as well. And so mostly it's all about risk reward. So it's a strategy that's we should be talking about a lot. And many people don't pay attention to it. People tend to think about how much money they can make, but hopefully they can join us. And if they don't join us, we'll just start anyway. But I believe some people are running late. Okay, Eniola is here. My African people, African timing, right? God have mercy. So let's just send a quick reminder to everybody to let us start it. Choo. Don Vexy, hi. Okay. Wait for the people. Hi, Eniola. Hi, Kemi.
Hi, good evening.
Hello, you.
Good evening. How are you?
I'm doing well, thank you. And you?
Yeah, not bad, thank you. Not bad. I'm keeping very well. Thank you. So we are waiting for other people to join us. Let me share my screen in the process anyway. This is what we shall be talking about: the risk management. So let me share it. Okay, so I'm waiting for other people to join us. Right, let's just get started. Okay, so we're going to be talking about risk management and position sizing. And when we're talking about risk management, give me a second. Might just make a bit of an adjustment there. So this is a live webinar which we are streaming and recording in case anybody wants to have another listen. And you should be able to get it on our YouTube page. So that's not a big deal. Anyway, okay, so bear with me. Right, let me share my screen again. Okay. Right, can you all hear me?
Yes, I can.
Good, Kemi. Right, Eniola, you've been in this game for a while now. Likewise, Kemi. So I might ask anybody. Ganil is here. Well done. Welcome. Nathaniel, you're here as well. Hi, Philip. So whoever's going to talk should feel free to talk. But let me just call a few people. Eniola, do you want to speak first? So when it comes to taking a trade, when you want to invest or a trade, how do you do it? How do you do it? Do you just buy, or how do you do it? How do you determine how much you should?
Okay, can you hear? I think what I mostly do is so.
Struggling to hear you. It's not very clear.
Okay, is it better now?
Better.
Okay, so what we do, especially for calls, is try as much as possible to get in as the given at 50%, and then see the movie, and then decide to either buy more, bit higher, or before it flies off too much, or wait for it to dip a little more and then buy the rest.
Okay, that's okay. So, okay, but how do you decide how much am I going to spend? Is that just how broke you are, or how do you decide?
Oh yeah, depends on how much I have.
It depends on how much you have. Interesting. Okay, thanks a lot, Kemi, for that one. Right, let's get somebody else. Ganiu. Oh, actually, before Ganiu, let me just get Eniola to talk to me. So, Eniola, when you want to place your trade, how do you decide how much to buy? How do you decide? Can't hear Eniola there. Okay, let me ask you, Ganiu. Can you hear me? Can you? Okay, Ganiu can't hear me. I'm not sure if you can hear me. I'm trying to get someone to contribute. Nick here. You're here, Nick here, and you're making me scream. So the question is, how do you decide how much of your, how do you decide how much you would invest way before you invest at all?
Yeah, what I do is I don't normally invest more than 5% of my portfolio at a go or in a trade. So what I do is I take at like 2% first to start, and if I see the trade is going well, I can now add the remaining 3%. Or if it's not going well, then I can just hold on to the 2% and then get out of the trade.
Okay.
But I don't spend more than 5% of my portfolio on any trade.
You don't spend more than 5%. So, okay.
Yeah.
So that's your strategy. Well done. Thank you. Okay. Ganiu, let me know when you're here. Let's see who else is. Who else? Let me speak to Pastor. Hi, Pastor. Or even Chubi. Chubi is more of an investor. But if you want to trade, but if you have stuff to say, just, please for free. Pastor, how do you decide how much am I going to spend? So there's a stock. You've done your analysis and you want to trade this stock. How do you decide how much you will spend on that stock? Can you hear me?
Can you hear me now?
I can hear you loud and clear, yes.
Okay. At the initial stage, when I started this journey, my plan is to get at least $1,000 in all my long-time stuff. $1,000. Yes, if I'm going to go for Amazon, then I'm going to go for Amazon. 1,000. That means like 1,000. This thing. That's my initial stage. So with the plan that those ones I think they have a solid structure, I will be adding to them. Those ones that has a solid structure, if they are going down, I'm going to do $1, what we call it, $1 cost average.
Cost average.
Yes, that was my plan at the initial stage. So, but as I am growing the system, some of them I don't look at that 1,000. I have numbers. I deal with numbers. I want to have certain amount of this number. That's what I do. For those I want to hold for a long time, but for those I want to trade it, I enter that goes when I have it, and I sell it. That was my plan from onset that I started this. So it has not changed. So
Okay.
either I use number, I use the minimum amount, I target $1,000.
Amazing. Great. Thank you for that. Okay. Let's just see somebody. Let's hear from us as well. I was going to ask Ayomide to contribute, but I'm sure she will know. Actually, Ayomide, do you want to talk to us? So how do you decide how much you will spend on a particular stock?
Hello, good evening.
Hi, good evening.
Yeah, like Pastor said, on my long-term stocks, what my strategy is to put them into pies on 212. So what I do is,
okay.
Yes, on trading 212. So all I was able to identify, some stocks, especially the dividend-paying stocks. I put them in a pie on 212. So what I do on a monthly basis is I top up, and that's basically
just
what
constantly
I
buy more. Okay, so that's one of the strategies. So that's more of an investment strategy, which is
so. But for trading, when it hits my target, I sell off and move on to the next play. That's what
how do you decide how much am I going to buy? When you see that thing, oh, I think I'm going to make this call.
Yeah,
how much decide how much I'm going to spend?
Case, for plays, I do depend. Well, it depends, but I do between $300 and $500 per play, so that I can have more profits. Because over the time, I've learned that if you want to do a trade, $20, $30, $40, $50 isn't anything. The more you put in there, the more your profits.
Amazing. Thank you. Okay, let's just hear from one or two more people and then we can just run through. Okay, we have Dami as well. I don't know if Dami want to say something. I'm just looking at the guys who've been investing for a while or trading for a while now. Even Bookie's here. Can we just hear from one more person? Ganu, should we talk to me, Ganu? No? Nobody else? Okay, anyway, I'm just going to go through a very short presentation, and this is about risk management, okay? Risk management, and there's so many angles to risk management when it comes to trading and investing, but we shall be talking about position sizing, okay? One thing you need to understand is that when we're talking about position sizing, most people, when it comes to trading, they focus on their trading profits, how much they can make, but that only shows a lack of experience, because if you focus on risk, it shows you that you have already learned some very tough lessons. And I've never met a trader who hasn't lost money. Never met anyone. But the successful ones are the ones who have more wins than losses, okay? So people tend to focus on how much they can make, but you always need to focus first thing on how much can you lose, all right? So let's just get started. Okay, I've just got a random person join us. I hope it's not a role, not sure, but we shall see. Right, okay. So what do we mean by position sizing? This is the size of a position within a particular portfolio, or the dollar amount that an investor is going to trade. Investors use it to determine how many units of security they can purchase while they control the risk and maximum return. It helps them control the risk and maximum returns. So position size is more important than chart reading. A lot of people tend to look at the charts, they read it, but when you look at your position sizing, a lot of people tend to neglect. That's how much can I lose, not how much can I make, not how great your strategy is. Okay, so it's kind of similar to what we call risk management. So if you think I have 100% commitment on a stock, then you are passing up opportunities. Some people just say, you know, I want everything on one stock. Yes, that's a strategy, but that's a big time risk. Okay, so you need to work more on how much you can lose and how much you can make. And I'll try and keep it simple. So let's look at the strategies involved. The first one is the fixed percentage per trade. Normally, as a trading rule, you should not have more than 1% of your stock on a particular trade at any one time. So if, for example, you have $100 portfolio size, just about $1 is what you should commit to a trade. It's just a rule, it's just a generic rule. You know, some people tend to go for 2%, but you got to understand when you look at this rule, you know, the first rule is to protect your capital. And number two is allow your portfolio to get other opportunities. So when some people are running out of, when your portfolio or your trade, your position is running out, then you got to be careful. Oh, it's touching your capital. You want to protect that as much as possible. The second one is what we call the fixed dollar amount. This is actually better, or should I say, it's a bit more flexible than the first one. So this time around, I've got a fixed amount, which some of you have mentioned, and that's only how much I will commit to a particular trade. No matter what trade it is, this is how much I'll trade, and that's it. So that's a fixed amount, okay? But it has its disadvantages because it will limit how much you can lose, and it will limit certain stocks that you cannot buy, okay? If you say your position size is only $100 per trade, of course, if you want to buy something like Amazon, which is about $3,500, for example, then you can only buy a certain fraction, you know, and when you think about the profit, it doesn't really go that much, okay? The next one is what we call the volatility base. It's more complex, but it's actually very much more flexible. So you take each trade in its own context. I look at the volatility of growth stocks. They're more volatile. And what do? Do you know what? I'm going to reduce my exposure to them. I look at another one. I'm going to improve or increase my exposure on them. So this is usually, how do I call it? It depends on how you do it. It's more flexible. That's what I'm trying to say. Okay. The final one, which many of you have talked about, averaging down. So you buy stocks for the long time, and then you just average down as it goes on, which is what, you know, is usually termed as the dollar cost averaging. So you buy a certain stock at $4. When it gets to $3, you probably buy a little bit more then, or you buy more. So you buy it when it gets cheaper. So overall, it evens out or spreads out your average price, and overall you tend to win more. So that's usually more flexible as well. And mostly long-term traders, they tend to do this. So let's look at the risk parameters. Number one, you've got to accept when you're wrong, especially if you're trading. You've got to be ready to cut your losses as soon as possible. Cut your losses quickly, okay? Because, you know, like I always say, you don't want to turn a fresh wound into a severed head, okay? A very small scab wound, you don't want to turn into a severed head. So you want to cut your loss as soon as you think you were wrong. Just let's go of your ego. The second one is that, you know, if you look at 10 consecutive losing trades, yeah, that should not exceed more than 25% of your portfolio. If it does, you're doing something wrong. So in essence, what I'm trying to say is that don't put more than 22% of your portfolio at risk at any one time at all. When it comes to stop loss, once your position size is figured out, apply your stop loss straight away, even before the stocks start moving. You figured out how much you're going to, you find a strategy, apply your position size, put in your stop loss, and then let it roll, let it play out. So you got to have a few cautions. And number one is that never adjust your stop loss to arrive at a desired position size. Many people tend to do that, start adjusting stop loss to arrive at your desired position size. Instead, you've got to adjust your position size to meet your risk level, which is your stop loss. Number two, trade using the same parameters on all trade regardless of your stop loss. So if you've got a strategy, you've got the same parameters, apply it all around. Make sure it's plain and level playing field. The next one is avoid risking more money to use a wider stop loss. So you're going to say, oh, I want to use a wider stop loss this time around, so I'm going to put more money. No, you are ruining your system. Don't do that. The next one is avoid risking less money and then you get your tight stop loss, which is opposite of what I've just talked about. Again, you've got to be careful. You're playing, you are prostituting your process, and that's what it is. Finally, adjust your position to meet your predetermined risk level. That's just control that position. You are controlling your money. Remember, one of the best things you need to do when it comes to the stock market is money management. One of the best things you need to learn is money management. People tend to get this wrong a lot of times. People just think, this is there, I just want to buy. People tend to make that mistake. So there are two rules here. You've got to size according to your setup. You've got to set up, size according to that. And number two, setup should dictate your position size. So if you've got your setup, you realize this is a very risky position. Based on that, I'm only going to risk this X amount of money, and I'm going to cut my loss at this point, because you realize it's a very volatile stock. Based on your setup, you realize this stock doesn't really move, or if it moves, it's very slow. Then you would set your position size according to that, and that will determine your risk as well. So a few notes here for you. Your correct position size is very crucial. Always consider how much you buy when you buy. Many people don't even think about that. You just buy, okay? Always know how you arrive at that price, regardless of your account size. How much am I going to buy? You need to know how you got there. Don't just say, I've got 20. A lot of people come to me, I've got $300 in my portfolio. What should I buy? Okay, even if I give you 10 stocks, or you research 10 stocks for yourselves, how do you know how much you're going to do? I've done research, I've reviewed a few portfolios, and I realized, guess what? Looking at these portfolios, all 10 really, really bad. And I've got people with $10 in their portfolio, or even $100, and they've got 50, 60 stocks. That's just brutal. And there was a portfolio I was looking at last year. This guy had about $100,000. He had $90,000 on one stock. $90,000 on one stock. Amazingly, the stock did very well last year, thousands of percentage. But this year, the stock has only produced 0. It's actually standing at -1 all year this year. So you got to be careful. But the previous performance is not an indication of the future. Always consider how much you buy when you buy. Always know how you arrive at the price, regardless of your account size. We just talked about that. Regardless of your account size, find the right position size that matches your trading style. We've all got different trading styles, okay? I have my trading style. Mine could be risk averse. Yours could be more risky. So you got to trade your stock, trade your style rather. I'm going to trade my style, and that's the way you should trade. You got to be very flexible. Trading style depends on your personality. We all have different personalities. I've got a personality. I love to protect my capital, believe it or not. I'm very, very risk averse, even though I do day trade sometimes. I'm very risk averse. Some people are not that. Okay, so if you want to make more money, feel free to risk more. Of course, if you think, you know what, I want to make more money, increase your position size, but you've got to make sure you've got a plan for that. It's all about planning, okay, anticipation and awareness. Just like when you want to drive, somebody wants to go to the right, got to look at the right, boom, before you turn in. You don't just turn to the right. You have your indicator, then you look, it's clear, then you go in. And that's the same thing with the position size. And, I just introduced this line in there. The fact that you're a bouncer, that does not mean you will get into fights. You could literally get people out, bundle them out, call the police for them. You don't have to get into fights, And I've got friends who were security guards in this country for 10 years, never got into one fight. Okay, so you got to understand that. Okay, finally, or I think this is the penultimate sheet, find a balance. Good could be better, and a better could be a greater trader. Okay, so if you're good and you're doing it, you could get better. And if you get better at what you're doing, you could become what? A greater trader. Always have a plan. A good trader who knows how to cut losses before they get so big and knows how to ride winners to substantial profit would be our ahead of most others who trade without clear plan whatsoever. Find the right balance. If you risk too little, then your accounts will not grow. If you're too scared of this thing, your accounts will not grow. But if you risk too much, your accounts could quickly be destroyed, even after a few bad trades. I was talking about a friend of mine, which I mentioned to the group last year. It started with $1,000. In December, it turned into $1 million. I wasn't just talking about him. I showed you guys the evidence, his plan. everything, his record, how he was keeping track. That's possible. And he wasn't trading every day. It was just focus on his plan. Okay, so overall, if you focus on trading profits, it shows that you have a lack of experience. But if you focus on the right risk management, it shows that you have already learned some tough lessons. And you would all learn lessons in this market. I've never seen anyone who would say, you know what, I didn't learn any lesson. I think I probably met a few, one or two people, but I wouldn't call them traders. You know, they did this 1-2 days. One of them made a lot of loss. The other one actually broke even. And he just said, you know what, PK, this is not for me. And I said, I respect that. It's not for everybody. That's the way it is. Okay, right. Your questions. Your questions. Let's get to your questions. The class is very quiet. Questions, guys. Questions.
Because the teaching was very clear, I guess.
Good.
That's why we're not asking questions.
Do we have any questions by anybody? Good. So I hope everyone is able to take something away from it. It's very, very short and concise, really. It's all about risk management. I could go on and on and on, but I try to focus on risk management when we talk, you know, things have got to do with risk management, and that's about it, really. But if there are no more questions, guys, I guess I'll see you in the group. And thanks for, oh boy, somebody raised their hand. Right. Okay. Right. So when I enter the mark and I decide to 50, I can't hear that. I know you were struggling, you were having internet connectivity problems. Well, Funlola, do you want to explain what you said? So when you enter the market and you decide, I don't get it, feel free to talk.
Okay, hello.
Hi.
Good evening from Nigeria. Okay, so please, I am new in this, and situations where I open up a trade and I'm like, okay, I'm just trying to study it, and I just enter my gut, and I said, okay, let me just take profit at 0.5, and I take it, I'm out, and I different trades like that. Does it make sense, or do you think it's risky? I don't know if it's right, because I'm new into this.
What you've done is called gambling. So you need to take that money and take it to Las Vegas and enjoy your money there. So, because before you say you're very new, so I don't know how much knowledge you have, but before you get into any trade at all, you need to study that trade. How do you think it will behave? Once you study that, now don't think how much I'm going to make. It's going up. That's what everybody tells me. It's going up. It's going up. No. How much can I lose? How much can I affect? Can I afford to lose? Remember, sometimes some people just leave it there. And I tell them, you know what? Greed will keep you in this stock, but pain will take you out of this stock. Okay, so you need to know how much you can lose before you get involved, and that's the way it should be. So what you did is, oh, it's going up, you did it, I'll quickly take profit now because you're not sure. Sometimes we get stopped out, but normally you should know how much is going to gain. In fact, in the group today, I made a few calls, and I respect those guys who are asking me, oh, you didn't put the stop loss there, stop loss. Even I make a few calls, they're like, oh, exits. So they're thinking about the exits already. One thing my mentor used to tell me is that always find the exit door before you enter a building. Okay, if you don't know the exit door and you enter that building, you might get trapped, and that's just the way it is. And the same thing on the stock market. So you need to have a bit of knowledge, but feel free to speak to me about it later, and we can discuss this as well. Yeah.
Thank you.
Thank you. Right. So we've got Pastor and Oyenike. So Oyenike first, ladies first.
Thank you. My question is this. There are times that, like, I decided that I won't, why do I put it now? I don't want to lose more than 5% of whatever amount I'm putting in. So, and at times I put the money in, maybe the stock is not going as high as I want it to go, or it's dropping. And I decided that I've lost almost the 5% I wanted. So I set my stop loss and I get out. And then you see the stock going back up after a while. Why was it just after I left? Now, so in those cases, how do you manage? Do you set a wider stop loss, or how do you know
That's
when 5% is okay, or maybe more?
No. Don't expose your capital. Remember, there are times whereby you want to take profits, and then the minute you take profit, and that's when it dips. Feel free to always think about those times as well that you've got it wrong, got it right. But remember, when it comes to this market, what's your job? Protect your capital. That's your job. Protect your capital. But also remember, when you're looking at this, when you're looking at the stock market, remember. The next thing is that you cannot win it all. And this is what I tell people. You only need to be right, 3 times out of 10? 3. That's quite poor, right? If you get a 3 out of 10, it's cool. They would crucify you. But you only need to be right 3 times out of 10. If you're taking profit at 20%, 20, 20, 20, that's 60. But if you're cutting your loss of 5, and you're wrong 7 times, that's 35. So out of 10 trades, you're still better off with what? 20% or 25%. Did that make sense? So there are times whereby
Yes, it does. A lot of sense.
You get into a position, you take your profit or you cut your loss. And so there are times you get into a trade, you take your profit or you cut your loss, and it keeps going up. So what? Who cares? That's just life. You move on to you move on to the next trade, or you just re-strategize and have a look again. Is my setup wrong? Is something wrong? Get on with the plan, and that's just the way it goes. You would never ever win the house, but remember, everything we're doing is adjustments. Adjustments is all we're doing, okay? So these things do happen. It happens to me. It happens to everybody. Nobody knows what's going to happen in the future. But what you're doing is you're planning based on what you have. And these are the edges you've got. And then you are anticipating what's going to happen. And that's just what it is. Makes sense? There's a calculation with position sizing, but I intentionally did not discuss it at all. The risk reward, there are multiple ratios, or the ATR, but I'm not going to go into that at all. Okay? Right, let's get Pastor.
Last year or last year, most of it. So around March, that was time that we.
Can you speak this network in Banana Island? I can hardly hear you.
Can you hear me now?
Okay, carry on. Yeah, last year.
Okay, and so last year, 2020 was a wonderful year. March April, the whole thing was like rapture moves happened, and the whole stock market was friendly. So around June, July, the thing was picking up. I bought some don't go then cheap with the hope that maybe it's going to get cheaper again, then you buy more. But now some of them have gotten so high, and as I said, that my portfolio size for each stock I want to hold is not, I have a certain amount. So some of them have gone so high, maybe 80% or whatever, and I need more. So what's your advice? Why go at this, to buy at this high rate, or I wait for it to go back, to get more into it? So I should just leave it and be watching the show I have there. That's what I'm like.
So yeah, so what you said is that you took in some position, and based on that, it's actually gone to ridiculously low amounts right now, right? So you've got to understand the 2 things you've got to always think about. Am I investing or am I trading? If you're trading and you've allowed it to get to 30%, no, you're not trading, you're investing actually. And you just want dollar cost average. Does that make sense? But if you are trading, then you've got to just start afresh. A lot of traders will tell you should have cut your loss. Okay, you've allowed that wound, which is one of the things we say, oh yeah, this one, I'll leave it for my great-grandchildren. And that's the thing. So you do not allow this thing to get really bad. Does that make sense? So if you're trading, find it and know that, you know what, I'm trading. But if you are investing, then of course, then you could actually reanalyze. It's time to do some dollar cost averaging now. Boom, add to those positions. Because investors don't care about right now. They don't care about that volatility. They worry about tomorrow. But traders, they're thinking, what's the next move? Boom, make the move, get out. I've got a few friends who literally stay in positions minutes. I've got some, the friend of mine that turned 1,000 to 1 million last year. He doesn't hold positions overnight, ever. It would tell you, if he does it, it will tell you I'm investing, I'm swinging it. I never exceed 2 days or 2 nights. never exceed 2 nights in any position at all. So there are different strategies that we need to implement, and that's just the way it goes. Okay, but you've got to understand, define it. Am I investing or am I trading? If you think you're investing, if the thesis stands as to why you had the stock, the fundamentals are still good, you should not worry about the short-term volatility, and that's just the way it is. Some businesses are just rubbish business, while some businesses are great business that they lose 90% of their market cap, but it's nothing. They just, when Amazon was down 90% at some point, Jeff Bezos said it. There's a video out there. He said, they're writing all this about us, but you know what, guys? Just keep working. Don't worry about them. And now look at where it took them. And that's just the way it works. So look at each company on its based on the fundamentals, on its merits. I hope I got the question right, because the volume was quite low.
It's okay. Well, the real thing is that maybe I got it at ridiculously low price, and the price has gone up now, and I still want to increase my position.
High price.
Yeah.
Oh, right. So now if you get it low, and now you want to increase your position.
Yes.
For me as a trader, fantastic. So now that we're flipping it, so you got it low, but you love this company, and now it's getting more expensive. What do we do? For me, if the fundamentals are still good, and I want to be a part of that company as an investor, it doesn't bother me, I will buy. But as a trader, traders do buy as it goes up as well. That's what they call buying in. Thanks, Jimmy. Somebody said he bought it low and now it's gone to the moon. The fundamentals still there. You still love this company. Why can you not buy it when it's more expensive? Why not? Why are you always waiting for them to do sales? You buy because you want to be a part of this company. You believe this company is going to be the future. You buy. But as a trader, you say, oh, do you know what? It's getting low. It's getting low. I want to buy and I want to sell into strength. And even some traders think this is going to go higher and they buy more because they think that's what they call buying into strength. There's nothing wrong doing both. Yeah. So that's just the way it is. You got to let your emotions, get rid of your emotions, be mechanical as possible, trust the process and just apply it like that. All right.
Experience like REFN. I think I have a gymnastic experience. That company, I bought it so expensive you call it. When it was up now, because I want to increase my position because I don't think of me. Usually I increase my position, then it started going down again. I have to wait for it down again.
So you have to wait for it. Yeah, you got to get rid of emotions. Get rid of emotions and just be as mechanical as possible. Deal with the facts. Okay. Are you seeing what is the charts telling you what you want it to tell you? If it is, then fine. How about the story? Is the story right? The fundamentals, the accounts, the management, the rumors, the products, etc. out there? If that's what it is, then you're investing and you're being there with them. But if it's trading, it's a chart telling you what you want to see. Are you happy with what you're reading? Then you stick to it. And that's stick to the process. And that's just the rule. Be as disciplined as possible.
All right. Thanks so much.
Thank you. Everybody's got emotions. We'll get carried away. Don't worry. Do we have any other question before we go?
Yes, BK. Good evening. Good evening,
sir. Mr. Dr. Bishop. How dare me?
How are you?
I'm good, thank you. How are you?
I'm fine. Actually, I'm having an opposite situation with what Pastor just narrated.
Okay.
my positions have just literally turned me into a full-time investor, like a very, very full-time investor. I don't even know when I'm going to actually come out from those positions.
So your middle name is now Warren Buffett.
Warren Buffett now. So what I'm asking is this. I am suggesting to myself that I need to now bring in literally some other funds into my portfolio and then start up the trading aspect now, where positions don't have to last, and then I take my profit and leave. Because I need to accordingly. Some of them I'm down 30%, 40%, and thereabouts.
Okay.
So,
Great. So this is what we shall do. So in that case, that's a different situation. If you think you're down 30, 40%, you are an investor, sir. You haven't caught your loss. That little headache. I mean, think about it. Losses don't just get to 40%. They start from somewhere. Of course, sometimes these things do gap down, but it doesn't always gap down. If it starts from 5, 7, 8%, you saw that, but you are hoping, you're praying to God that it's going to go up. You're praying. You should have been extremely disciplined and say, you know what? Out. This is a bad trade. I'm going to get rid of ego. I'm going to let it go, and I'm going to say this is a bad trade. Okay? So that's the first thing you should say to yourself, and know that you've got it wrong. Be able to accept defeat. Bye-bye, I'm out. That's the first thing you should have done. But now that you are an investor, now you've got to start looking or reviewing each of these companies. Review them, look at them. Do you still want to be a part of this company as an investor? Cut your losses. I've seen someone actually who took, I think he had about $2,000 left, about a pound, thereabout, from about £20,000 invested. He cut everything, he took out the 2,000 and he just said, you know what, I'm going to start trading and I'm going to grow this £2,000. Yeah, he was able to grow the £2,000. I think he ended up at £78,000 the last time we spoke. He literally, he took all the losses and he said, you know what, that's it. I'm starting from here now. I'm strictly trading. I don't care. Sometimes I'm reviewing the strategy and I'm saying, oh, but this is a good one. You don't invest this. We'll say, that's it. Don't talk about it anymore. I want another one. I'm like, no, but this is a great company. Say, no, I don't care. And you have to understand, yeah, like I always say, all stocks move, but not all of them are tradable. Some people see some stocks, yeah, I'm trading this. No, it doesn't. It's not a tradable stock. So that's just the way it works. So you've got to review each one and start thinking, you know what, this is it now, this is it now. You've got to trade. Your personality is a trading personality. Remember last year when we were talking, you always say, no, I don't care about all these things. I just want to trade. And then you're buying and now that we're trading, I'm like, I can't see you. I don't see you, you know?
I'm far dumbfounded. Those positions they get me dumbfounded.
There you go. So you've got to be able to say, do you know what, I'm going to start afresh. I've been defeated due to my ignorance. Yeah. And, you know, everybody always starts like that. Don't believe anyone who tells you. Yeah, it's hard to start as a trader. Everybody starts off stuff. And eventually, you know, holding it for a while, you realize, you know what, let me just introduce some of this thing into my boots. And that's just the way people do it. Okay, yeah, but different strategies. There's nothing wrong with being an investor. It's amazing. It's an amazing feat, actually. In fact, we're going to have another session on investing. In fact, and this is probably going to be Chewy that's going to hold this one. We should be talking about how do you do it? Let's just call it how to find patience. You know, things are going down for 25 years, and this guy is just going to write a lot of essay about how 25 years is such a short time in your life. Don't worry, just go and sleep, enjoy your life. Your stock is down 99.999%, and it's going to tell you guys that one is nothing, my friend. What do you mean 99.999%? You know, it showed us recently a position that was about minus something 90-something% down after 15 years. Are you going to hold it? You know? Okay, he said, are you still going to hold it? And some people said, no, I'm not going to hold that. And he's laughing. So we need to even have a strategy, or we need to have a separate discussion on that. How to find patience. What do you do? What gives you that discipline to say, you know what? I've got 10 positions or 5. And from these 5 positions, 4 of them are 99.8% down. And the last one is even 80% down. Are you telling me to hold? How do you do that? How do you find that people? That's something else we're going to talk about that. So that's something else. That's a different webinar we're going to talk about at the next house meeting. But this particular one here, strictly as a trader, risk management is your #1 thing. It's very, very key. Happy?
Yeah, thank you so much, sir. Thank you so much.
Different strategies, brother. Okay, do we have any other question? None? No other questions? Okay, if there's no other question, guys, I've got to say thank you for joining us, the session. You will be able to get the replay, or it's actually available on YouTube. And we shall see you at the next session then, okay? Thanks, everybody. This is the house meeting for the World Hackers. Thank you. Bye-bye.